I'm Alan Kinney, Editorial Director with REIT.com, and I'm at the Waldorf Astoria Hotel in New York City for REITWeek 2014, NAREIT's Investor Forum. Joining me is Tom DeRosa, CEO of Health Care REIT. So, tell me, Tom, there's been quite a bit of transaction activity lately in the healthcare space. I know that your company just did a massive equity offering. What's behind all that?
Well, Alan, we have had a very strong acquisition pipeline in the first part of 2014. So we raised $1 billion overnight last week, which was the largest overnight equity offering in over a year of any real estate company, but not only any real estate company, but any company on the New York Stock Exchange. We have continued to find growth opportunities both in the U.S. and outside the U.S. through our long-term operating partners. Our model is a bit different from other participants in the healthcare REIT space in that we have over 30 operating partners who generate most of our new investment opportunity. So we generated in the first quarter over $500 million in new investments with our long-term operating partners. And we brought in one new operating partner called SRG, based in California, through one of our financial partners, which is PSP, a Canadian institutional investor. And then associated with the offering we did the other day, we announced that in the second quarter, we've already done over $400 million in new investments, and 92% of those new investments were with our existing operating partners.
So then looking at the development pipeline, what's going on there?
Well, we have a number of developments going on across our business units, that being seniors housing and medical facilities. We currently are doing some new developments with one of our operating partners, which is called Genesis. Genesis is really doing the state-of-the-art rehab skilled nursing facilities, and those are very exciting new pieces in the healthcare continuum. And we're developing some new seniors housing in the London market. We have an office in the UK based in London. We have over $2 billion invested in the UK, mostly in the London area. And there's been a change in demand there. You have a much wealthier population that is seeking private pay long-term care options versus those that would be offered by the National Health Service, which has been the traditional route for residents of the UK. So we're building some real state-of-the-art senior housing facilities there.
So in terms of your international platform then, where's the development out there? Where's the growth opportunity?
In terms of the our international platform is very interesting. Today, 12% of our assets are outside the U.S., and that would be in Canada, which is around 4 or 5%, and about 8% in the U.K. We have grown outside the U.S. in the same way we've grown inside the U.S., which is by finding the best-in-class operating partners. So we think that's a very sane way to move outside our core market. So for instance, we have two best-in-class operators in Canada, Revera and Chartwell, who are our operating partners there, and that's how we are growing in Canada. We are a partner in the growth of their business. We are not just out there buying healthcare real estate. There are lots of people that do that, participate in auctions of portfolios. That's not really what we do. We are at the table with these operators, and we are a part of their business, of their long-term business plan. So that's how we're growing our business. That's where our new investment opportunities are coming from, and we believe that's a lot more compelling for our shareholders than if we're paying high prices, low cap rates by participating in auctions.
Well, thank you so much for the update, Tom.
Thanks, Alan.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.